Hi traders and welcome to the Technical Analysis Market Watch on Friday the 8th of March. So I've seen a lot of action for a week that is bringing non-farm payrolls to us tonight, and a lot of the key indices have actually set all-time highs again, and the currencies are really moving as well. So we'll jump straight into the charts and see if we can identify any trades for today or early into next week. All right, so we'll start out here with the Aussie USD. And we can see we've had two very big days of movement. Basically, we did find support at the 65 cent mark, and it was struggling to get down there. You can see that we pushed through a couple of times over the last few weeks. But most recently, especially this week, it couldn't quite hold and maintain that level. It did try to push down. You can see the big wicks there hitting the 20 moving average, but it couldn't quite get any lower than this area here. Now, a lot of that has to do with the dollar index strength, but we'll get to that in a few moments' time. But you can see that we've got a very, very big move, and then it's been followed up by today's move, which has basically gone all the way to that 66 or 66.20 really. So we know now, again, we've got resistance right in front of us there. Of course, we had very big resistance for a couple of weeks there for all of these wicks that were causing the problems in the first place, because this is a very problematic area for it. But now it's well and truly trading above the 20 and the 50 moving average. Now, you look at those two candles and you say, well, they could have been hard to get into. How would we actually trade those? Well, the key is always to go to the smaller time frames, because you've got to remember that although that the bigger daily time frame gives us the higher high, higher lows and trading off the 20 moving average, and higher lower highs and lower lows trading down from the moving averages, the smaller time frames give us the same thing. So really, when you're trading the those types of moves, you go to a smaller time frame. Like let's just say we'll go to the 15-minute if you were scalping, or if you're day trading, and you're basically getting the same patterns, except it's just there's smaller movements, obviously, because of the time. So you can see here that although the move was quite exaggerated on the daily, you look at it and you say, well, that was a really big move. How would we even get in on that? If you go to the smaller time frame and you're scalping that, knowing that the momentum is already strong in that direction, you can see that every time it touches the 20 moving average is your entry point. Now, the target was the 66 cent mark, so that was where we've got our resistance point. Yes, it went slightly higher than that, but it often does. But in the meantime, all of these moves, every touch of that 20 moving average was an opportunity to get in on a momentum swing that you knew was already there. And you knew that momentum was there because you only have to go to a 1 hour to know that there was big power and across the 20 and the 50 moving average where that trend actually started. So although the 1 hour didn't really give any good entry point, it had too much momentum to even pull back, the 15-minute chart actually gave us plenty of entry. So something to keep in mind when you are looking at the bigger time frames. They're mainly the guide to tell us what is really happening in the market, but to actually get in on those smaller trades, you go to the smaller time frames and actually work backwards from there. We'll go over to the US dollar CAD, and we've seen a bit of a collapse from there too. Look, it was peppering that 136 area. It needed to get above there for it to be a viable trade. But you'll remember I was saying over the last week or two that even though it was making higher highs, it was grinding its way up there. Now, had it closed up there, had it closed above the 136, that would have been a very, very different story, because that really opened itself up to a very big move up to the 138. And given that the dollar strength looked okay at that point, that would have been a very viable trade. But you can see that it never actually got there. It failed at every attempt to get higher than 136. And then it eventually collapsed. Okay, so you can see that it was broken down past the 20 and the 50 moving average and all of that resistance. But it's got plenty of friends. A lot of the dollar-based pairs have actually gone down in sync. So look, we'll go to a 15-minute chart just to give you a bit of an idea of how this would have worked as well. Same deal, okay? Even though it looks very sharp and reactive, you can see that all pullbacks to the 20 moving average gave you an entry point to actually get down to where it is now. So really, really important to factor that in when you are trading, especially if you are scalping. But the 136 failed to close above, and consequently it eventually collapsed. Okay, US dollar yen, not much different in the sense that it was rolling over at this point. We're not really surprised with this one because it was already at a very key level. Obviously a psychological level, round number level, call it whatever you want. It was all important. But once that broke the 20 moving average a couple of days ago, you can see that it was really on its way down. Once it broke past this low here, that was your opportunity to get in. The target, for me, probably would have been the 148.50 really, because that was where we've got a roll reversal zone. Would have been happy to be taking profit there on that short. But now it's trying to rally up a little bit of it, so we'll just keep an eye on that. But the next real level of support will be around that 146.50 to 60 area. So if we get a new low and we get continuation of the sell-off, so if we go to again, we can go to 15-minute chart. If we see a continuation of this, you can see again, touches of the 20 moving average. Very, very straightforward. It's trying to rally off this base now, but if we do get a continuation of this and we start to see lower highs and lower lows again, that target would look like around that 146.50 area, which is the next level of support for that one. The dollar index is really telling us the story. It eventually did collapse. You can see that we were attempting to go higher. It was really, really fighting inside this zone. And the moving average was bearing down on it. It was obvious, very, very heavy support, but it broke the point of no return for me. That 103.50 was the point where if it had have broken that level, this was going to be in trouble, and it did break that in the last trading session. So you can see that once it did that, this was in all sorts of trouble, and now it's broken all sorts of resistance, support, sorry. That was resistance on the way up. Now, the next level for this is around that sort of 102.50. That's where you're going to find your next level of support. You can see we've got a big, big price action, momentum here that pushed off from this level. So we can see that the 102 sort of 50 is probably the next level of support. So we might see a little bit more weakness. The 20 and the 50 is about to cross. So keep in mind that it hasn't really found any support at this point here. And it may continue another 30 or so points to get to that level of support from this point here. I'll pop a line there. So just keep that one in mind. Of course, the euro is the one that you'd probably be trading in that point. But again, this did its job. Higher, high, higher, low sequence, came back down, touch of 20 moving average and off. This week's been very, very strong. About to hit the target. The 109.50 is the level that you'd be aiming for on the way up. It's got the higher, high, high, low sequence now off a very, very good base. We knew that was a pretty good base at 107. If it was going to fail, this was the level it was going to fail at, and it maintained its movements above the moving averages, and now it's just about hit its target. So be mindful around this area here that there is pretty heavy resistance above. The dollar index may well have a little bit more to sell off. And if it does, more than likely the euro is going to pick up to around the first profit target level here. But you can see it's been very, very strong, and the 20 and the 50 moving average are all but crossing here. So really, really important to note. Again, so we can keep on the theme of what's happening today. You can go to the smaller time frames, and you can see that although the last little bit was very, very reactive and got up there very quick, you can see off the base, it came back and gave us the entry point that we were looking for. So pretty reasonable trading on the euro. If you go through the time frames, you're always going to find, something that you will be able to trade. The euro is, a very universal currency that, basically nearly every trading session, whether it's the US, the Asian session or whatever, you're going to get a reasonable amount of movement. So just keep that in mind with the euro. It's a good trading instrument. And finally, the S&P 500, the big move again, broke to a new time high again. It's non-farm payroll. I'm not surprised that we've had a week where we haven't gone higher or lower, but this way I am a little bit surprised that we've actually gone to a new high prior to the non-farm payroll numbers. Normally the market consolidates in this week, and it did. I mean, you could see that it obviously sold down and it worked its way up. But in the grand scheme of things, it's gone all the way to 50.50, and we're sitting at a high of 51.60. So really, it's only been a 100-point range for the week. So, given that every other week what we've seen this week has been explosive over this last few months, it's relatively tight in its trading range. 100 points is okay. But just be prepared, though, that it's probably going to, see a little bit of volatility over the next 24 hours until, non-farm payrolls comes out, the biggest event of the month generally. If it's a great number, then we could see a break up to 5,200. But if the number is disappointing, then it may track back down to that 20 moving average, which is probably the first point of support. You can see we've got a little bit of support through the price action there as well. We've got 5 candles that have touched it and a 20 moving average. So that's what I'd be looking for on a pullback. So if we see weakness after, during the US session after the announcement, I would be looking for a track back down to around that 50.50. But I would be very hesitant to take on any longers until it actually breaks through and comes back and tests it again. I'd be a little bit reluctant. And if you are going to do it, just keep your trades relatively short. And whatever direction we're trading in next week is the one we'll follow. I think you just jump on the momentum train. If we are trading above the 51.50 on Monday, because obviously the announcement would have been okay, and that's where it's pushing. Just run with that, let it play out and take small pullbacks and just continue on the long. But if it's rolling over and we're getting a series of lower highs and lower lows in a smaller time frame, then look for a move back to that 50-50 and use the 20 moving average as your target for that one. All right, so I hope you've had a great week's trading. Big moves. Although they were in a range that was set and predetermined by the start of the week, you were still able to get some good trades. So hopefully you're able to jump into those smaller time frames and take advantage of some of those moves. Trade carefully going into non-farm payroll, of course, because we know the volatility can increase and can sometimes spike through stop losses a bit quicker than you think. Have a great weekend and look forward to seeing you all next week.